the role of agriculture sector. Agriculture sector plays an important role in economic development. In a country like India, with a large section of non-agricultural population requires high level of output and increasing productivity in agriculture. At the time of India's independence, agricultural productivity was virtually nil, which began to improve in the early part of the planning, but by the mid of 1960s, droughts, famines and food shortages forced the planners and policymakers to make concerted efforts to improve the agricultural performance and conserve the scarce foreign exchange by reducing the dependence on food imports. Adoption of modern technology in agriculture since the mid 1960s has had mixed results, with a rise in the initial years followed by a deceleration. The introduction of new technology in agriculture initially was limited to a few crops and regions and was neutral to scale. However, even after more than 65 years of independence, the Indian farmer is still poor, land quality is still low, and agriculture continues to depend to a large extent on rains and other natural factors. A large majority of holdings are less than 2 hectares, with the small and marginal farmers are always cash constrained. All this has direct implication for agricultural performance. It also requires public investment in agriculture. Transition from traditional to the modern technology has implication for input demand and utilization. Hence, part of policy must focus on the availability of appropriate inputs. After studying this module, you shall be able to know the importance of agricultural sector in an economy, learn the different kinds of agricultural inputs, identify the policy action for improvement in the agricultural sector. The different kinds of agricultural inputs. Agricultural inputs comprise of consumable and capital inputs: seeds, fertilizers, irrigation, pesticides, tractors and other agricultural equipment and tools. Credit and infrastructure, marketing and storage, agricultural labor and crop insurance. Inputs in traditional and modern agriculture. Traditionally, agricultural production was for subsistence or for barter, but with the rise in non-agricultural population, need to increase farm output and make it available in the market became imperative. Need to improve production and productivity implies movement away from the tradition to the modern technology. The main characteristic of the modern technology is the use of divisible inputs purchased from the market. This raises the demand for cash. Use of divisible, marketed and modern inputs has slowly evolved to include the use of machines. However, the latter are not scale neutral and require a particular threshold of farm size. First is seeds. Adoption of modern technology in agriculture comprised the use of high yield variety of seeds, assured water supply and the fertilizer to improve the land productivity. Seeds account for 20 to 25% of productivity. The seed industry in India is worth rupees 9,000 crores compared to rupees 2,20,000 crores of the world market, with the private sector providing 70% of the seeds. The private sector spends 10 to 12% of their turnover on research and development and have a technological financial partner. More than 500 companies exist in seed production and trade. Some of the well-known names are Monsanto and Unilever. Indian seed exports comprise 1% of the global market. Production of foundation and breeder seeds in India has increased from 38.65 thousand quintals to 136.73 thousand quintals. The distribution of seeds increased from 57.5 to 277.3 thousand quintals. There has been a rise in the surplus of seeds available over the amount required between 2006 to 2011. In 1988, policy on seed development to increase the production and productivity was adopted. Import of seeds was to be followed by testing and indigenous development. In 2001, Act to protect plant varieties and farmers' right to develop new varieties and promote investment. India participated in OECD seed scheme for 5 seeds: grasses and legumes, cereals, crucifers and oil and fiber seeds, maize and sorghum and vegetables. National Seeds Policy of 2002 aims at increasing the production and seed replacement rate. Seed replacement rate is the percentage of area sown out of the total area of crop planted in the season by using certified or quality seeds other than the farm saved seed. Areas for further development include the protection of different varieties of plants and seeds and seed development. Seed Bill of 2004 has been designed to curb the use of bad seeds and promote seed testing. Some of the problems in the use of seeds arises due to a mismatch between breeder to the foundation seeds and foundation to certified seed. There is a need to follow seed chain and quality norms, provide farmers with timely and easy access to better plant seeds, and develop seeds as quality of seed is important and must be available on time. What is required is greater development of improved varieties, timely deliveries, availability of skilled practitioners to encourage breeding, and increased public investment and participation in seed development. Second is fertilizers. Fertilizers comprises 6 macro and 8 micronutrients. Global consumption in 2010 was worth US $130 billion and volume of consumption was 163 million ton consumption. In India, in 2010, 24 US $billion in value and 28 million ton in volume of fertilizers were consumed. India and China form 40% of the global consumption. The world market for NPK has a combined share of 170 million tons. There is a global excess supply. Total production of NPK in India increased from 127 to 288 million tons between 1991 and 2010. India is the second largest producer of nitrogen and third largest of phosphate fertilizers. Potash is fully imported. Consumption increased from 77 to 144 kilo per hectare. However, efficiency in the use of nitrogen has declined in India at the rate of 1.7% per annum between 1970 to 2004. Fertilizer Control Order adopted in 1985 includes customized, fortified, bio and organic fertilizers. It also covers the fixation of MRP of fertilizer for fair price and easy access to farmers. It is especially important for urea. However, due to excessive subsidy, there has been imbalanced use of fertilizers. farmers lack the knowledge to ensure balanced use and plant nutrition, which leads to poor crop management and fall in yields. Low farm gate prices encourage the overuse, which is counterproductive as it leads to lower productivity, distorts cropping pattern, leads to wastage of fertilizers, and contaminates and pollutes the soil. The fertilizer industry is not innovative and there is no government policy to encourage research and development. There is greater emphasis on subsidy than efficiency. In April 2010, a nutrient-based subsidy known as NBS was announced, which allows industry to obtain subsidy on the basis of nutrient content of fertilizers than on the product, but it is not applicable on urea. The selling price of fertilizer except urea is to be determined by the import or manufacturer. Import of all fertilizer is under OGL except urea. NBS allows the companies to compete on the basis of cost, brand, distribution network, etc. What is required is research and development incentive to develop new products, reduce the subsidy and working capital and timely availability of micronutrient. NBS promotes competition on the basis of nutrients. Third is agrochemicals. These comprise insecticides, herbicides, fungicides, veterinary medicines and pesticides. With a rise in demand for food and a decline in the average yield, there is a pressure to protect the meager crop. In India, per hectare consumption of chemical is 381 gram compared with the world average of 500 grams. There are 9 major companies producing pesticides with a combined market share of 80%. Increased use of GM seeds, especially the Monsanto seeds, the use of crop protection by using pesticides is also effective if the Monsanto pest control chemicals are used. Expensive seeds which have to be purchased than used from the previous year's output induces the farmers to depend heavily on pesticides as they cannot afford a crop failure because it means no income to pay off loans and buy next year's seed and fulfill other consumption needs. Overuse of pesticides also has negative externalities in contamination of groundwater, genetic disorders and health hazards. The largest share in pest control is that of insecticides, followed by herbicides and fungicides. In 2009, the largest consumption of pesticides was for paddy 28%, followed by cotton 20% and then vegetables 14%. Some states have introduced intensive pest surveillance mechanism to control the pests. National Institute for Plant Health Management came up in 2008 for human resource development in biosecurity. Plant quarantine services are available for exporters to obtain their phytosanitary certificates. The 5 major plant quarantine centers at Amritsar, Kolkata, Mumbai, Delhi and Chennai with the ISO 9000 certification. Fourth is machines, fuels and lubricants. Mechanization of farm activities involving the use of tractors, threshers, harvesters and irrigation pumps along with the simple mechanical tools has increased. Although not part of the neutral to scale modern technology used in agriculture, mechanization has increased especially on large farms owned by big farmers. One of the reasons is the rise in the cost of labor. For land development, the traditional practice of using the plow and blade for tilling and preparing the seed beds here has been replaced by the use of tractors, mold board plows and power tillers. Seed drills and seed cum fertilizer drill are used for sowing and planting, the power weeder for weeding, blower for the plant protection, and harvesters and threshers for harvesting and threshing. The advantages of mechanization of agriculture include a rise in the productivity, crop intensity, no shortage of labor, shifting of land from fodder to grain production, increased employment and farmers' income. It also leads to a conservation in the use of seeds and fertilizers. However, increased mechanization poses some challenges and issues which also need to be addressed. The most important is the specificity of equipment to farm size and soil type. Use of machines renders cattle redundant, and safe use of equipment requires imparting training and knowledge. High cost of equipment and scattered and small farms do not deter small farmers from using this equipment, as they can hire these machines. Of all the equipment used, small tractors are the fastest growing segment component to the overall growth of 4 to 5% for all tractors. India is the largest producer of tractors in the world. Other machines used include electrical and mechanical power operated tool, pump sets, sprayers, plows, drills, threshers and the combines. The government's report on agricultural implements and machinery notes that mechanization leads to a rise in productivity, saving of seeds and fertilizers, and an increase in the cropping intensity, resulting in the farmers' incomes. Fifth is water. Another important input is water. Traditional agriculture depends on rain, but due to uncertainty of monsoons, it is important for the farmers to have access to some form of irrigation facilities. Total irrigation potential in India is 140 million hectares, of which 58.4 million hectares comprises of major or medium irrigation works, and the rest are minor works, with 70% of irrigation dependent on groundwater sources. However, there exists a large gap between the actual and the potential irrigation. The biggest challenge is the overuse of irrigation water with environmental consequences, especially the waste of groundwater and increased salinity of soil. Ways have been evolved to encourage the drip and sprinkler system and the development of the micro irrigational works. Sixth is labor. Agricultural activity in a country like India is generally labor intensive. Moreover, employment opportunities outside the rural and agricultural area are limited. Most often, labor productivity is low due to the excessive dependence on land, which hides high disguised unemployment and is reflected in low wages. Low levels of income due to large dependence on agriculture and intersectoral inequalities have resulted in high incidence of rural poverty. The government has tried to address these issues by introducing various poverty alleviation programs in the rural areas in an attempt to either create assets for sustained income generation or wage employment opportunities. Of these, the most recent is the Manrega, enacted in 2005. The explicit objective is to generate at least 100 days of employment and reduce distress migration and encourage the women empowerment. However, some critics of the scheme hold Manrega responsible for the rise in the rural wages due to the lack of availability of sufficient labor for the agricultural operations. Of the rural workforce, the largest component is that of the casual labor, especially the landless. With large unemployment or limited employment potential in manufacturing, in recent times, dependence on agriculture for wage employment is still large. Hence, the index of wages of agricultural labor in rural areas is an important indicator of the well-being of the rural landless and the overall rural population. Seventh is credit. Lack of institutional credit is one of the most significant binding constraint on Indian agriculture, notwithstanding the priority given to the agricultural credit in government policy. Alternatively, peasants and small and marginal farmers resort to private loans at usurious rates of interest from the local landlords and the money lenders. The reason for the lack of willingness on part of formal banking sector to provide loans is the low income of the farmers, inability to furnish collateral, small farm size and the associated uncertain output and income and administrative delays. The role of cooperatives in providing bank loans has been limited because a substantial proportion of the loans disbursed are appropriated by large farmers who have a high rate of default. The share of commercial banks has increased over the period between 2000 and 2010 to almost 74%, while the share of regional rural banks has remained almost the same at around 10%, with the share of cooperative banks declining to 16% from 39%. The apex bank dealing with the agricultural credit and development is the NABARD, which provides refinance facility to the RRBs and the cooperative banks and facilitates the implementation of the self-help ground bank linkage programs. The loan waivers which are provided by the government in the event of a default are misdirected as they benefit the large farmer who initially had access to institutional credit. Schemes like the Kisan Credit Card 1991 are attempt to provide short-term loans to the farmers for crops. Eighth is crop insurance. This involves providing insurance or protection to the farmers in the event of a natural disaster or destruction of crops due to pest or disease, which either prevents the sowing or else destroys the crop standing in the field. Risk arises due to the loss of crop, lower than the expected yields and lower prices. Crop insurance helps the farmers to overcome these risks and stabilize their incomes. This way, it prevents the farmers from distress sale of land and other family assets. The origins of crop insurance in India go back to 1972 with experiments with hybrid 4 cotton. In 1979, pilot crop insurance scheme introduced in 1979 to 1984. Comprehensive crop insurance scheme was introduced in 1985, which was replaced by the National Agricultural Insurance Scheme known as NAIS in 1999 and modified NAIS thereafter. It covers all food crops and oilseeds, commercial crops and horticultural crops. A pilot scheme on seed crop insurance introduced in 1999 for better quality seeds from 2007, Weather Insurance Index was introduced, protects yield from vagaries of weather based on the average rainfall over 5 to 10 years. The government set up the Agricultural Insurance Company of India in 2002 with the aim of providing yield and weather-based crop insurance covering 500 districts and 20 million farmers. At present, weather-based crop insurance scheme is also operative to cover for the losses due to poor weather conditions. It operates on an area approach as opposed to the individual approach. A reference unit area is linked to a reference weather station, and all the farmers are eligible for insurance claims in the area if actual weather conditions deviate from the reference table. Premium rates vary with each crop and each reference area. However, crop insurance is still in its experimental stages in India. Effective implementation requires measurement of yields, sharing of information by agencies, and less reliance on the rural finance institutions. However, weak institutional structure, difference in area and individual yields, and categorization of farmers on the basis of loan sanction are some of the other problems faced in providing crop insurance. There is a need to increase the coverage in terms of area, farmers and value of output. Ninth is packing and marketing or warehousing. This involves grading, packing, transport and storage of agricultural output. In India, the infrastructure is extremely ill designed to support the farmers in marketing their produce for profit. Lack of storage and transport facilities force the marginal farmers to sell at harvest prices which are low and fail to even cover their cost of production. Important agencies are the Commission for Agricultural Cost and Prices and the Food Corporation of India. There are also separate bodies or boards for cotton, tea, coffee, rubber, spices and vegetables and agricultural market committees. The policy action. Demand supply gaps. Ability to use modern inputs depend on the farm size and purchasing power, which is direct function of income or credit availability. High market prices of fertilizers and other marketed inputs necessitate the provision of subsidies, which has fiscal implications. Provision of inputs at the right time is very crucial, especially the seeds, water and fertilizers. Low purchasing power and high prices due to the high cost of production and a significant share of imports in ensuring availability creates the demand supply gap, so that coordination is essential. There is a need to create awareness among the farmers, create packages suited to the small farms, improve storage facilities, offer targeted subsidies, and promote certified and standardized products and maintain strict quality control. To optimize the use of inputs in the correct proportion, soil testing is imperative. Use of organic inputs can be encouraged to reduce the negative effects of excess use of chemicals and deal with the shortage of inputs. Use of fertilizer is low because it is an expensive input and a large majority of farmers have low purchasing power. This is so because of the forced sale of crops at the time of harvest, whereby farmers have limited resources to be able to afford expensive inputs. Moreover, the fate of the crop is uncertain. Due to the lack of insurance, there is no guarantee that even the production cost may not be recovered. Government subsidy is appropriated largely by the rich farmers, which needs to be checked. It is crucial to rationalize the use of fertilizers by promoting the balanced and efficient use of fertilizers. There is a need to provide demonstrations and training programs. We must recognize that the use of all inputs is complementary to each other. For example, if irrigation facilities not available, then the use of other inputs like fertilizer is also reduced. Government must provide support services and inputs through appropriate institutions and organizations. If the latter exist, they are not effective due to the inadequate staff, insufficient funds, lack of motivation and appropriation of most benefits by large farmers, excluding the small and marginal farmers from this process. The deficiencies in the public delivery system have direct implications for agricultural output. Other areas which need urgent attention are the provision of credit, infrastructure including electricity, availability of inputs like fertilizers and seeds, and assistance in marketing, transportation and storage. It is also suggested by some to include the private sector in partnership with the public sector to provide the inputs and assist the farmers in marketing. We will summarize what we have discussed in this module. First, agricultural sector plays an important role in the economic development. Second, the Indian farmer is still poor, land quality is low, and agriculture continues to depend to a large extent on rains and other natural factors. Third, different kinds of agricultural inputs include seeds, fertilizers, agrochemicals, machines, fuels and lubricants, water, labor, credit, crop insurance, packing and marketing or warehousing. Fourth, demand-supply gap needs to be minimized as provision of inputs like seeds, fertilizers is very crucial. Fifth, use of organic inputs needs to be increased to lower down the negative effects of chemical fertilizers. Sixth, government must provide support services and inputs through appropriate institutions and organizations.